Morning everybody, it's Chris here from Swing Education with the 4 majors analysis for the 31st of March 2011. Just looking at the euro against US dollar on our CTC strategy template. On a daily, we saw price pull right down below the previous day, but eventually US markets took price higher and we closed higher than the previous day. The trading range, however, is quite small, indecisive. A lot of wicks though, but the body itself is quite indecisive. But the momentum is still shifting to the upside, and this is primarily coming off the 1400 mark, which was a previous resistance area and then a support. 20 period is still below price. We have a red arrow, but we're still blue on either side on the CTC, so just caution. And I think the caution comes into play with these wicks being so small. Ideally, our next target would be the 14,2500 mark. We're slowly making our way there. This swing example was a previous one, and we've now broken through it. Could we see a bit of hesitation? We're seeing a bit of action down the bottom end of the wick for this morning's Asian market and the European session open. We'd like to see a price staying at least above the prior close of last night. So close of 14.12.6, and seeing it use that as a support area, and then moving forward during the course of today. So if that can be our support area for this pair, yesterday's close, then ideally we're going to see further movement to the upside. 14.12.70 ish. If that can be our support intraday, 14.12.70. Let's have a look and see what that is. 14.12. Okay, so price can stay above that area, then we should be looking for further momentum to the upside. If it breaks below that, then we'll obviously be trading lower than yesterday's close, and what we could be seeing ultimately is a reattempt of this little trend here, because on a daily we've broken that intermediate trend now, haven't we? Because the whole understanding of swings is that you have to have higher highs or lower lows as price moves forward in a trend. And you can see over here, for example, we bounce to the upside, bounce to the upside, bounce, 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 and then we had a bit of a squeeze, and the breakout tends to occur in the squeeze along this area. Normally it happens a lot sooner, but we've taken this one right to the end. Now we've had a break to the upside of that, this intermediate, but now we need to stay above this, and then we should see a further upside movement. We've had price revert right down to the bottom, but it still closed higher, so momentum you can still see is still higher, even though it's still small. Now that we've broken above this, as long as we can stay above this area here at 14.12 and change, then are we going to see extensions to the upside? CTC, however, is still long, and we're still above this trend line. Okay, so things are still pointing long until we have a break of this trend line, this major trend line here. Then we should be looking for either 1400 is another consolidation area, and then we'll look for opportunities. On the 30-minute, you can see we've had a breakout this morning at 6. It's trading higher than the Asian market high, which is this little boy over here. There we go. Now if we can stay above 14.50, then it's trading higher than the Asian market high, which is higher than yesterday's high, intraday high, and we should, well, on par with yesterday's high. Then we should be looking for further extensions to the upside. Okay, so that's euro against US dollar. Be back next with the sterling against US dollar. Okay, sterling in front of me. Let's have a look at the daily time frame. It was important yesterday. This is the daily. This is the long-term resistance support area at 1600. The price has been playing with for a number of months now. We saw price take off and failed at higher levels, and then prior highs around the 1630 were breached slightly, but price still managed to pull back. And now what's happened is we've seen price revert right back down to the 1600 in the past week or so, and then we've had a bounce. And yesterday was important primarily because we wanted to see if price was going to close higher, and it did need to close higher than the previous 2 days because there were spinning tops indecision on a 1600 support area. If that had failed and we saw yesterday's candle closed lower, there would have been a definite indication for further selling to take place. But we've seen a bounce to the upside in this case, and the Asian market has taken it higher, and European session open is also rallied slightly higher. However, we're now headbutting against the 50 and the 200 period moving average, 20 period moving average, apologies, at roughly 1611.93. So what is that? Well, if we take our, let's have a look at the retracements. So that's where we started. The retracement started there, and then we had the bounce to the upside. We're now at the 38.2% mark. Fifth area, fancy that. So got to factor that in. It's got to obviously break higher than that during the course of this European session, and then hopefully what we can see is the US session taking it forward and climbing higher. Otherwise, what we could do is just see a retrace and pullback, and then obviously a failure to find support has now found the underside of this resistance at, and we could see a reattempt at 1600. Okay, remember that we have a red and red candles. The only thing that's missing from this part is the CTC red on either side. Let's have a look at the intraday time frame. Look at our FOIA, for example, the downtrend here that's taking shape, and then we had a nice solid bounce on the 1600. There we go. That's on a 4-hour chart. And now we're making our way back up. And now you can see that we have the 50 period above us, as we'd have on our daily. This is the 4-hour. Our 20 period is below us, but we have our 50 above us. The different story on the hourly, 30-minute, 15-minute, and 5, they're all blue, confirming the long position or entry for this time frame. And reason being is we've had, this is a hourly chart, guys. We've had the 1600. There we go. That's what we needed to be trading above to still be confirmed as bullish. And yesterday we saw that started the morning off quite bearish, but then we saw price bounce, and by doing so then we had higher swings, and by having higher swings, which means that trend direction is up, and we're now trading that direction as we speak. Momentum is slightly abrasive now. That's primarily because we're now heading towards prior resistance and support area that I mentioned earlier, and that's coming in the shape of this 38.2% on a daily time frame. Okay, so 38.2%, 32. Okay, so you can see that this prior pause here, consolidation, is the actual boundary. So we're now trading in that consolidation band. You can see that was the bottom edge of that, and we're trading at 1610, and then we have the upper range of that consolidation band at the resistance area. So very important we make a note of that. So we're trading above 1630, and then we're obviously breaking higher than the 38.2 going into the remainder of the day, and that should be remain bullish. However, if we find that price reverts or can't break above this area during the course of the day, then obviously it's going to be classified as a resistance area, and we should be looking for possible consolidation or even a pullback to the downside, even though CTC is in our favor. Remember that we are having a bounce, and we're still trading below the two moving averages during the day, so we're still negative to a degree, even though the CTC is positive. See, I'm putting this all together, guys. Very, very important. Okay, so that's it for sterling. Okay, in front of me is the CTC and the Eurostar Swiss franc on a daily time frame. There's our all important long-term support and resistance area that we broke through, and we saw consolidation and then a definite break to the downside. The trend then was that, and we've had a break higher and a consolidation at a prior support area, being these two here, just below the 0.92500 mark. Yesterday's candle, we saw a nice push to the upside. However, USS in trading brought it back down again, and we saw this long exhaustion candle. This is an exhaustion candle. just confirming resistance, and you'll notice that on an intraday time frame or smaller time frame, you can see noticeably that there's 1, 2, 3, 4 days now where prices failed to break above 0.920. Strong resistance. So you've got to act on that. You've got to hold on a moment. Price hasn't been able to break higher than that. Well, it has broken, but it hasn't closed higher than that. That's definitely got to be a resistance area. And if that's a definite resistance, and I'll just do my projection. That's at 61.8, fell to, so that's going to be a failure. So we should be looking for shorting opportunities because of that. CTC is in our favor to go short. We have got, however, a blue consolidation bar, but that's just a heads up candle because we don't have any blue on either side as well as the CTC. So we should be looking for shorting opportunities. And sure enough, if you look at our intraday time frames, the 30-minute, 15-minute, you can see that price has reverted to the downside. Notice how the 20-period moving average is acting as a resistance level, a nice ceiling area level for this pair as it's moved lower since the Asian market open. We had, if I can just draw a nice straight line, there we go. That was the Asian market low, and we've broken through it at 9165. Now we're looking to go, our next area would be 9140 would be our next target. Okay, we've been there before. When downtrend, you notice that this wick that we saw higher is this breakout, fake up breakout and pullback, which captured a lot of people in the market yesterday. Faked them in and pulled them back, only to revert to the downside. Projection tool, we're looking at 61.8, roughly just run the 9140 as our next target for the CTC. Okay, and the last pair today is the US dollar against Japanese yen. And you've seen since the intervention from the Japanese governments and the rest of the world started purchasing US dollars and selling yen, we've seen a move to the upside, and we're testing the 50% projection of this initial move to the upside. That's it, there we go, 50, and price has made a full recovery for this pair, as you can see, and we're trading well above the previous swing. There was a resistance level that we saw for a long period of time that was breached, and now what's happened is we're actually failing to break higher than the 8300, which is a prior resistance level in the past. So we need to, there's definitely a resistance level at 8300. It needs to break above 8300 and close higher than 8300 to see price at least make another attempt at roughly the 8380 mark, the next target. Okay, so 50% is the projection, and we're now hitting resistance at the 8300 mark. Price needs to close higher. Asian market trading has seen price trade higher than 8300, but during the latter part of this morning's trading session and European session, we've seen a pullback. So we need to see it stay or try and make ground and try and close higher than 8300 either today or the next coming day going into the remainder of this week. Otherwise, what we could see is resistance level. We've had a resistance level before, and we'll see price just pull back, and then we could see it possibly tempting this 8200 mark. So intraday, because this huge intervention move, you can see the CTC will be blue. However, we've seen price pull back after attempting the 8300 mark, and we've hit resistance on the 8315 area. Failed to break any higher, failed to make any higher highs, and we've seen price pull back, and it's pulled back and broken lower than a previous swing to the upside, this one over here, and by doing so it's now broken the trend direction for that time frame. If I could draw a nice straight line, would be great. So that swing there, notice how the 50-period moving average and the 20 is acted as a support area as the trend has moved to the upside, but subsequently has failed. And now what's happening is we've seen price trading the underside of a price support, now a resistance. And are we going to see, if projection, if I look at this pullback up, could we look at 61.8 being our first target? Not too far away, and that would take us back to the trend line, this intermediate or the major intraday trend line for this pair, which is on a hourly chart. So as long as it's trading on the upside of this trend line, then we should possibly see this just as a consolidation. Then we could see another push to the upside. Failure and a break of this trend line would see price revert to the downside, and then we could look at areas like 81.70 prior resistance level to be our next target, our second target. Okay, so as things stand, 50 period moving average acting as a support area, but on the underside of a prior swing. So okay, breakout, swing, pullback. We could see possibility of 82.40 being tested, and then hopefully see a bounce on the 82.40. So if it could stay above 82.40.45, then we could see a definite reattempt of the 8300 mark and higher. The failure to break to find support at 82.40 or consolidation around this trend line would see price break this trend direction, and we could see a revert to the downside on 81.70 being our next target. CTC for the hourly is red on the arrow candle, not so red on the CTC. So let's look at our smaller time frames, which you see right now are red. Confirmation is there, resist, support, 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 breakout, resistance, and now we're moving to the downside. So look at that as confirmation. So on our smaller time frames we have red, red, red. If you look at our 5-minute entry candle, you notice we have a bounce on a prior support area. It needs to break lower than that, obviously, for an opportunity to get to go bearish, primarily because this is the Asian market low, and it needs to be trading lower than the Asian market low in order for this to be a continuation of a negative trend to the downside. Notice we have swing lows, so CTC is working a treat. However, we need to be trading lower than 82.55 in order for us to see any further shorting opportunities arise. So make a note of that. Got to close lower than 82.55 for there to be a potential trade further to the downside today. Otherwise, what we're going to do is going to see a bounce, which is going to come around that uptrend, and then we're going to see a reattempt of the 8300 mark, and then the high at 8320. If it closes higher than 8320, then we definitely have a close higher on our daily time frame, which is the 8300, because it'll be closing at 8320, and then it'll just confirm that there's going to be further upside for the remainder of this week going into the following next week. Hey guys, that's it for today. Please ensure that you follow the rules of the CTC and don't trade until such time, or don't place any trades until you get a genuine signal. Make sure your money management is all in line before you trade, and make sure that you trade serenely.